While the Fed is not expected to cut the rate, the market will be watching closely for any indications about future policy shifts. And one key piece of information that will be coming out this meeting is the Summary of Economic Projections, or SEP. Now, this document outlines the Fed's outlook on economic growth, unemployment, and inflation. And most importantly, it gives us insight onto how many rate cuts the Fed is expected to make in 2025. Well, if the SEP suggests that the Fed is taking a more cautious approach and pushing rate cuts further into the year, we could see rates remain elevated. But on the flip side, if the Fed signals more optimism about inflation cooling down, we could see the rates begin to ease. So, should you wait for the SEP to come out before locking in your rate? Well, that depends on your risk tolerance. If you're someone who prefers certainty, locking in now would be a safer bet, since we know that rates have been trending up and the Fed isn't planning a cut just yet. However, if you can afford to wait and are comfortable with some volatility, watching how the Fed reacts next week could give you a better idea of where rates are headed in the months to come. If the SEP suggests more aggressive cuts later in the year, waiting could work in your favor. But if the Fed takes a more cautious approach, rates could stay elevated, making today's rates look more attractive in hindsight.